What is going on, everybody? Welcome to the Inventing the Future podcast. Our mission with this show is to introduce you to the entrepreneurs and ideas that will inspire and empower you to solve the world's biggest problems. And we're certainly going to do that this episode by talking about NFTs. So, I'm Julian Alvarez, and I'm a software engineer at Meta and a Gen Z entrepreneur, where I'm currently the co founder and CTO at a startup named Vise. All right, so NFTs. I have been absolutely obsessed with this space for the last couple months, and I'm by no means an expert, but I have definitely taken a deep dive into this space the last few weeks. Bought my first NFT about 2.5 months ago, and now have like 12 of them. And it's been such a fascinating thing to learn about, and I think like everyone needs to know what is going on here. So I'm going to try my best to explain what NFTs are, but some of the concepts may be a little difficult to understand. So don't worry if you don't understand everything, but I'll do my best. And before I start, of course, I must say this is not financial advice. Do your own research, and I'll give you my opinion and perspective and maybe share some things I'm investing in. But yeah, you got to do your own research because it can be risky as well. So, firstly, why should you even care? Why should I care about NFTs? So, NFTs are a new technology, and understanding them is going to give you an invaluable problem solving tool in your toolkit as an entrepreneur. Of course, the NFTs for one manner are just for solving problems, aren't just for solving problems. You can also do several other things, like for example, you can raise money, right? So many projects are raising millions of dollars just from having an idea. There's no need to go to venture capitalists or anything like that. And it's a different dynamic, though. There are pros and cons because when you go and raise money through NFTs, you're building a community and you're building like hundreds or thousands of people in your community that are going to vouch for you and are going to also hold you accountable. With VCs, though, you may get a more experienced entrepreneur or investor that can give you advice and whatnot. And there's less people to have to manage and deal with, like with a whole community. So there's trade offs, and that's important to understand. But as an entrepreneur, you got to raise money, and raising money is very difficult at times. So maybe NFTs could be a good way to do that. And then finally, the other reason you should care is because of investing. I mean, this space is blowing up in terms of lucrative investment opportunities. And let me give you some figures to prove that. So, the market cap of NFTs, basically the total amount of money in NFTs, went from $17 million in January of 2021 to $3.3 billion in August 2021. That is a 19,000% increase in just a few months. And in the same time, the total market cap of the S&P increased by 22%. The S&P 500 is the general index of the stock market, and 22% is pretty high for the S&P. It's usually 8%. So you can see the difference, astronomical. The trading volume, basically, what is the total amount of money that has been traded? In quarter three, at the end of quarter three of 2020, it was 4.75 million, and that increased to 6.5 billion in quarter three of 2021. That's a 141,000% increase in just 1 year. And then the other metric we want to look at is the adoption, right? The number of owners of NFT. So the number of people that own NFTs went from 1 million to 25 million people just throughout this year. That's a 25x increase in adoption. So this is like hockey stick shit, man. And also, the most expensive NFT ever was sold this year. And it's a digital collage of images by an artist named Beeple that sold for $69.3 million in an auction in March. I'll tell you a little bit more about that story later on when we talk about art. But before that, what the fuck is an NFT? Right. So it's, in case you're wondering, it's not Northern Fried Tacos, and no, it's not ninja fighting tattoos. NFT stands for non-fungible token. Now, to understand what non-fungible means, let's first define what fungible means. So fungible, something that is fungible means that it can be exchanged for something else of equal value. For example, currencies like the US dollar or Bitcoin are fungible. If we exchange any $5 bill for another $5 bill, you'll have the exact same value. Similarly, if I give you one Bitcoin and you give me back your one Bitcoin, it's the same thing. It's worth the same thing. It's fungible, right? It's not really unique. So, on the other hand, non fungible means that it's one of a kind, it's something unique. In other words, something is non fungible when there is only one version of it and cannot be replaced with anything else because there is nothing of exact equal value. So, for example, actually, like most things in the real world are non fungible. And let me give you some examples. So original paintings, right? You're a painter, painting pretty paintings, and your original piece of art is non-fungible because there's only one. The Mona Lisa, the original one, there's only one. You can make copies of it, but the original one that was actually painted on is non-fungible. You can't really exchange it for something of equal value because it's unique. Real estate is another example of something that's non-fungible. There's only one piece of land in that certain location where it is, and that house in its exact form is also unique. It's non-fungible. You can't really trade it for something of equal value. You'd have to put a dollar price on it. So it's kind of crazy because for the first time ever, people can genuinely own digital objects, right? And I know this is kind of like hard to fathom because when you think of the digital world, you don't really think of scarcity because you can look at an image online, you can copy it, you paste it, and it's the exact same replica, right? There's no uniqueness to it. However, NFTs can be the data of an NFT, which I'll explain how this works in a second. They can be stored in the blockchain, and that represents a unique piece of a digital item or asset on the blockchain. Before I get a little more into the technical details, I think it's important to note that almost everything in the real world is an NFT. Is fun. Yeah, is non fungible. It's not an NFT because non fungible token. It's not a token. Token is the digitalization of an item, but everything in the real world is non fungible. So, for example, this jacket that I may be wearing, there may be many copies of it, but this is the only one of its kind that exists because I've worn it. Maybe it has some special meaning and value to me. The computer that I have, it's also non fungible because maybe it has some scratches. Maybe the tech doesn't work in the exact same fashion. Like even though there's like replicas of things, there is no one to one exact clone in the real world, right? So um let's go into how actually last point here is that you can think of NFTs as digital scarcity where the ownership of a scarce digital asset can be proven. So now the question is, how do you prove it? How do NFTs actually work? So NFTs are blockchain based records that uniquely represent pieces of media. So the media can be anything digital, and that includes art, videos, music, gifs, games, text, memes, code, whatever, right? And the way it works is that NFTs contain highly trustworthy documentation of their history and origin. And they have code attached to do almost anything programmers can dream up. One very popular feature is code that ensures that the original creator of the NFT receives royalty from secondary sales. That is to say, I can create an NFT, sell it, and the original sale is called minting, which I'll explain in a bit. But after you own it, you can resell it in a secondary market, and anytime you resell it, you, the owner, get 10% of the royalties, 10% of the total price that it was sold for. So that way you can get residual income. So you can do very interesting things like that. But really, the way you're able to prove ownership is because NFTs are stored on the blockchain, on a blockchain. There's many blockchains. Ethereum is the most popular blockchain. There's a lot of other ones like Avalanche, Polygon, Solana, but Ethereum is the most popular. You don't need to know the difference of the different blockchains, but basically, blockchain is the same technology that enabled Bitcoin to be owned by hundreds of millions of people around the world, and it represents hundreds of billions of dollars of value. Like, really, when you think of blockchain, what you should really think about is a public, decentralized database, right? So, what does that mean? Let's look at the opposite case. of a private centralized database. When you're like on Facebook, for example, you're scrolling and they get data on how you use the app, that data is stored in a private centralized database. Only Facebook and some of its employees have access to that. On the contrary, the blockchain is a public database that's decentralized. This means that you and I can both go and look at the data that's on the blockchain. It's a public ledger. Anyone can go look at it. The code is also a public ledger. Anyone can go look at the code and read it. It's open source, and the data that's stored on it is also publicly accessible. Now, this is really important because if a database where data is stored is private, that means that the company that owns that database and the data is the only ones that can access that data. But if a database is public and decentralized, that means that anyone can go ahead and access that data and use it. So what happened? NFTs leveraged the technology of blockchain in order to put the creation of a new NFT on the blockchain. So the data of NFTs and who owns them lives on the blockchain. So this is what happens when you mint an NFT. So firstly, minting an NFT refers to the process of turning a digital file. Like I previously mentioned, this can be art, videos, music, GIFs, text, code, and you can store that digital file as a digital asset on the blockchain. And the digital item or file is stored in the blockchain, which is a decentralized public database forever, right? So that means it's impossible to edit, modify, or delete it. And because the database is public, you can see when it was created, who currently owns it, and what the history of the transfers of the digital asset have been. And by the way, why do they call it minting an NFT when you first like create it? They call it minting because minting is a term people use to make a coin by stamping the metal. All right, but how do you prove ownership of an NFT? So, when you mint an NFT, you interact with a smart contract in which you exchange a certain amount of a token, such as, for example, ETH. ETH is the currency and the token that you use on Ethereum. So, Ethereum and ETH are not the same thing. Ethereum is the blockchain, ETH is the token, the currency. So, again, when you go to mint an NFT, like to buy it from the original creator, you interact with a smart contract. That smart contract basically has the terms and conditions of like, hey, you're going to get this NFT, and in exchange, you will give us the certain amount of Ethereum that it costs. So you do this when you interact with this, you interact with a wallet, right? So you have a digital wallet that you interact with. You can think of like your physical wallet. You store like different currencies like US dollar, maybe euros, whatever it is. Well, here you also store your different tokens like ETH. You store them on your digital wallet. And when you interact, when you buy the NFT, you exchange your ETH and you get the NFT in return. And the NFT is now stored in your wallet. And the way you can prove you own it is because your wallet has an address, right? Similar to how you have an email, that's how people are able to reach you, and that's how you're able to reach people. You have a specific address for your digital wallet, and you can prove that you own it by accessing certain websites or certain communities with your wallet that proves that you own a specific NFT. So, pretty crazy stuff, huh? All right, so I want to go into like the different types of NFTs and use cases for NFTs, but some things I want to clarify first is that there's NFTs can be like two different things. You can have collections, like for example, very popular NFT collections are CryptoPunks and Bored Ape Yacht Club, and this is like a collection of like 10,000 NFTs, for example. You can have collections of 1,000, 200, whatever it is. And these collections, basically, the NFTs are all unique, but they're under the same theme, the same category. But there's different traits in the NFT, like for example, what hat they're wearing, what face they have, the color of their skin, the necklace, the shirt. All of those are traits that can have different levels of rarity, and that makes each one unique, even though it's under the same collection. Additionally, you could have like one-to-one art, right? One of a kind. There's no collection. It's just that one. Now, all NFTs have art or a digital asset associated with it, but some NFTs are just purely that digital asset or art, but others have interesting utility, and that's what I'll be talking about. So I have 9 different use cases, I believe, for NFTs that I want to give you an example of. So the first one is digital art or collectibles. So let's backtrack, right? What is the problem here? So before, when artists sold their paintings, they only did it once, and that was it. Whatever they sold it for, that's the money that they made, and that's all they would ever get. Additionally, once they sold their piece of art, they would likely never communicate with the buyer, especially if that painting was resold many times. However, now artists can constantly generate revenue through royalties embedded into the smart contract of the NFTs. So I talked about this before. Basically, when you create an NFT, you can define how you want to write up that smart contract to the point where basically, if I mint the NFT and I sell it, you can say, like, hey, every time someone trades this NFT, I want 10% of the cost that it was sold for back in my wallet. That is the royalties. And now artists are able to generate continual revenue because of this, right? It's not just a one time sale and that's all the money you get. Now you have passive income that continues to be generated. And that's extremely powerful for creators. So this is a great incentive for the artists because they're able to keep creating art and content due to the money that they keep on making for this. So one example of a piece of art, digital art that sold that I mentioned was Beeple. Beeple sold it for $69.3 million. As I told you, and anytime someone sells that piece of art, again, Beeple gets 10%. It's pretty crazy. Now, you may be wondering why did someone pay $69 million for this piece of art? Why are people paying ridiculous sums of money for this piece of art? So, I mean, people like collecting digital art for the same reason people like physical art, such as fashion, baseball cards. And the reason for that is like a mix of aesthetics, like, whoa, this is really cool art, patronage, like, hey, I really want to support this artist, status, like, whoa, I'm super cool, I own this, kind of like a really cool car, or just collecting it and for socializing, right? So let me dive into two of these actually. So firstly, status, right? Social capital. People don't only care about what their financial capital is; they care about their social capital, or as we Gen Zs would call it, clout. So, if you own a specific NFT that's super cool or that costs a lot of money, you get social capital. That's status in itself. Same way with like any piece of art you have in your home. And actually, the amount of social capital that you're going to be getting is going to increase as the tools and technologies to display your NFTs come to fruition. So, for example, Twitter is adding a feature where you can display what NFTs you own on your profile. And additionally, in the metaverse, you're going to have a lot of opportunities to display your NFTs. Imagine that in the metaverse, which I'll explain later, in the metaverse, like this digital virtual world, you'll be able to have your own home where you can showcase your NFTs. So, in your actual physical home, you may have some paintings, and when people come to your home, they see it and they're like, that's some freaking cool art. But NFTs, like, where are you going to display that, right? Like, right now, there's no place to. But as the metaverse gets built out, you'll have your own space. You can invite your friends to your virtual space or house, whatever it is, and showcase your NFTs there. Additionally, there's metaverses like Decentraland and Sandbox, which I'll talk a little bit more about later on, where you can also showcase your NFTs in your avatar. Like, I can buy really cool NFT shoes and wear them in Decentraland. And as I walk around and people see my avatar, they see that NFT. By the way, there's this company, I can't remember the name, but they're making NFT shoes, and they recently sold the company to Nike for, I think, hundreds of millions of dollars, which is insane. But all right, apart from social capital, people may not care about that. Why else might you want art? Well, you can actually make money from loaning out your NFT to a virtual museum, to a real life digital museum, or to like games that want to use it, or to like films or movies that want to use it. Like, you own that property, that intellectual property, and you can loan it out and people rent it out for that. In fact, Beeple, the artist that sold it for $69 million, the person that bought and paid that price said he would have paid a lot more, and he thinks it's worth $1 billion because when you have virtual museums, like literally there's going to be museums in the metaverse where you can just go and visit and see really cool art. Well, Beeple's piece is going to be one of those really cool pieces of art in museums, and people pay to go to the virtual museum, which means that the owner of Beeple's piece and any other art that is there, any other NFTs, people are going to get royalties from that, from the sale of those virtual museums. We're also going to have, we already have real life digital museums where people are displaying digital art on them. So, really crazy thing is happening here. I would say with digital art, though, it's very risky because you have to know like what is cool art or what could be valuable. It's like art in the real world. You might pay millions of dollars for a square and you think it's amazing. Other people just don't get it, right? So could be kind of risky, and you have to know how to evaluate art. So I don't really dabble there. All right, but this is maybe the form or utility of NFTs that we've heard of, but it's so much broader than that. And I asked what questions in my Instagram for the podcast, what questions you guys have about NFTs, and Mauricio de Gregori asked what are some other uses for NFTs besides digital art. So let's get into it. The second one is music. Music is a form of art, but I'd say it's pretty different from digital art itself. Now, music is a particularly important area for NFTs because Web 2 pays out very little to musicians. Like the pain points here are firstly, they don't make a lot of money. Like artists are traditionally bought out by music labels and are often giving little to no royalties at all. Like, for example, out of the 8 million musicians on streaming services like Spotify, only 15,000 of them make $50,000 a year or more. That's less than 0.2% of artists. So, I mean, outside of superstars, musicians really don't make that much money from the internet. And that's because the vast majority of revenue is kept by the streaming services and music labels. The other so how do artists usually make money? Either through streaming or buying their songs. And by the way, on Spotify you get like a third to two-thirds of a penny per stream, not that much, and that's because your music label may take the majority of that. Additionally, musicians may make money through going to concerts, but if you're not that big, you may not be able to attract a big enough crowd to make a significant amount of money. Or they could sell merch, but again, if you don't have like that many fans, you're not going to make a significant amount of revenue from that. Apart from pain point, apart from money, the other pain point is that marketing can be pretty expensive and ineffective. Like, have you ever discovered a low-key artist through an ad? And I mean, if you did, like in Spotify's discovery, you probably have to pay a ton of money to get your ad in a place people would actually listen to you. And again, new and upcoming artists, since they don't make a lot of money or don't have a lot of money, they don't really have much to invest in marketing anyways. Apart from that, the third and final pain point is that because you could not it is that you can't even like communicate with the artist, right? If you are a fan of the music, it's pretty hard sometimes to be able to communicate with the musician. So there's not a lot of communities built out for that. Like if I listen to an artist on Spotify, if I really want to reach out to them, I might have to find them on socials, which isn't very convenient. All right, so how does NFT solve this? So there's a bunch of new music NFT projects that have launched recently, including sound.xyz and royal.io. I'll focus just on royal.io, but with royal.io, an artist can fractionalize ownership of a song. What does that mean? So, for example, let's say that the creator of a song fractionalizes the ownership of their song into 1,000 NFTs. That means that if you own one of the 1,000 NFTs, you would get 0.1% ownership and therefore 0.1% royalties of the song. So this means that you can now own a portion of a song created by an artist. Now, not only do you make passive income through royalties, which if the song does succeed and does better, you're going to make a good amount of royalties. But if the song also does well, you could resell that one NFT or however many NFTs you own back into the market for a higher price, right? So it's like owning a house. You can make money from the appreciation of the house, or you could also rent it out and make money passively through renting the house out. Uh, Additionally, you get a huge benefit of being able to interact with your community, right? So uh, NFTs really are like community drivers. Like if you buy a fraction of a song, you're much more likely to share the song of the artist or tell others about the artist because you have a financial incentive for the song and artist to succeed. So NFTs really are allowing you to create exclusive communities that can only be accessed by people that own an NFT for that song or artist. That means that you will be able to more easily communicate with artists and other fans. So in general, to summarize this, artists will be able to get more money to fund their music production by selling a fraction of their potential. They will be able to get more feedback from their fans, which will help them improve and get better. They're going to get free marketing on their music because their fans have a financial incentive to share the music. And they're going to receive passive income from the royalties they get on the reselling of the NFTs that give you ownership on certain songs. So the big shift here that I want to communicate is that you are able to invest in an artist's potential, right? This is crazy because before you could only like stream a song and pay them through that or go to a concert. You couldn't really invest in an artist's potential, but now you can. Only music labels were able to invest in a musician's potential, but now everyone is going to have access to that. All right, and finally, musicians are going to be able to get an additional source of income through concerts that they host in the metaverse. That means that more and more concerts are being hosted in the metaverse. In fact, Travis Scott, even though he's controversial right now, he hosted a concert in Fortnite and generated $20 million of revenue. Insane. So, and you get access to a global audience. You don't have to go to a city where you have raving fans. You can go do it anywhere in the metaverse, and people all over the world can connect. So, great things coming ahead for them. All right, the third use case for NFTs is access based NFTs. So, in the real world, let's use the example of tickets. Tickets give you access to events such as like concerts and sporting events, but there's a huge problem around fraud and scamming with tickets. So one platform that's an example of where you can buy secondary, you can buy and resell tickets, is StubHub. But StubHub charges super high fees, like 10 to 25% for buyers and 15% for sellers. That's an aggregate of around 30% in fees in total between the buyers and the sellers. Now, why do they charge such crazy high fees? Well, that's because one, they're a centralized platform and company that has to pay its employees to operate. But two, more importantly, because they give you the guarantee that if you get scammed and the ticket doesn't work, they'll give you your money back. So scamming does happen. Fraud is very common. And that means that if you do buy on StubHub and you get scammed, StubHub has to pay a really high price to make up for that. Same thing with credit card companies and fraud. They have to pay a huge amount of money to be able to cover that. And those are fees that are reflected in credit cards and whatnot. So, and apart from that, maybe you get your money back, but you went to the concert and they didn't let you in. It's still a shitty experience. So not fun at all. And so, but NFTs really have the potential to solve this problem because you can say like, hey, I bought the NFT as a ticket for this event. I can prove that I have it. And here it is. And if I want to sell it, I can use a smart contract where I can see like, hey, this is the NFT I'm going to get. It's going to be in my wallet and this is what I pay for it. It's decentralized. There's a transaction. There's no intermediary, which means that you don't have to pay stupid high fees. And there's no risk of fraud because you can verify that the ticket is authentic and that there's only one of that ticket. So pretty crazy stuff. Another way access-based NFTs are being manifested is through access to exclusive communities and perks and privileges. So, for example, one of the biggest, most popular NFT projects is called Bored Ape Yacht Club. The cheapest Bored Ape, there's 10,000 of them. The cheapest one can cost you $250,000. It's pretty crazy, but that gives you access to exclusive membership where you can go to in person events and metaverse and events in the metaverse where only people that have a Bored Ape Yacht Club are able to go. Um, and there's crazy things. I also bought a Axis based NFT called the Founders Key, Impact Theory Founders Key by Tom Bailey. This was actually the first NFT that I bought, and this gives you access to quarterly dinners for everyone that owns the NFT. You can get backstage meet and greet passes for Tom. You can get whitelisted to NFT drops. That just means you get priority access to being able to mint the NFTs, and you get all of Tom's premium content for Impact Theory University for free for life, which costs like $50 a month. So you can get really interesting. You can do really interesting things with this. All right, fourth use case for NFTs is gaming and game objects. So there are over 3.2 billion gamers around the world that spend an average of $100 to $200 per year on gaming. So in today's world, gamers spend on aggregate about $40 billion per year on virtual goods. And some examples of these virtual goods are skins that make your character look cooler. So, for example, in games like League of Legends and Fortnite, you can buy skins, you look cooler. It sounds kind of silly, but people love it and they pay money for that. Again, social capital playing a role there. But the problem with this is that users don't really own those objects. The company does. And the objects don't really have any real value outside of the game. It's just cool within the game, but no one outside of the game really values it that much. So, really, virtual goods and games are not very interoperable. That means they can't easily be transferred elsewhere. So, this is where NFTs come in. NFTs allow users to genuinely own the objects within a game. And that means that they could sell the assets in a game for real money. All right, to give you an example of this, I'm going to tell you about the most popular NFT game right now called Axie Infinity. Now, Axie Infinity is a play to earn game. That's right, you heard it right. Play to earn. That means you make money from playing a freaking video game. It's insane. And it's generated $1.2 billion in revenue this year, which is just astronomical. There's only a handful of games that generated that revenue this year. And it's pretty crazy. The way to give you a conception of what's being enabled with crypto and NFTs, let me tell you a little bit about how Axie works very quickly. So with Axie Infinity, in order to start playing, you need a team of three axes. You need a team of axes, which consists of three axes. Each axis is an NFT. It's like a little pet. It's the thing you play with in the game, and it's an NFT, right? There's thousands of axes, but each one is different. It has different abilities, parts, whatever. And once you have your team, you can play the game. In the game, you can make money by earning the SLP token, which is a cryptocurrency called Smooth Love Potion, or SLP. You make the token from doing like a daily quest or a daily adventure, or through PvP, which means player versus player, which is just basically battling other people online. And if you beat someone else online, you get SLP. If you lose, you don't get anything. And the more you win, the higher your ranking goes up. And the higher your ranking, the more SLP you make per win. So, why does SLP have any value at all? Well, it's because in order for new people to adopt Axie Infinity, you need new axes. How do you create new axes? You take two of them, you make them fall in love, they breed, and in order for them to breed, you need to give them 1,800 SLP, or Smooth Love Potion, right? So it's love potion. So basically, playing the game and making SLP is inflationary. You're creating SLP, a cryptocurrency, out of thin air, but then you use that cryptocurrency to breed two axes, and that in turn creates a deflationary action. It's called a burn mechanism. You're burning the token, which causes a deflationary action so that the supply of SLP balances out. So basically, as long as the game continues to grow, more people are going to want to play. For more people to play, you got to get axes and breed them. In order to breed them, you need tokens, which you get from playing the game. So it's crazy freaking ecosystem. And I myself currently, so I guess basically most people that would benefit from playing this game, like earning $5 to $20 a day, is what you can make. Most of those people that would gain value from that are people in countries like Venezuela or Philippines, where the minimum monthly wage is $6 to $10 to $11 per month. $6 to $10 per month, and these people are making like uh, $5 to $20 in a day for playing 2 to 4 hours, but they don't have like $600 to $1,000 in order to start playing the game. You need each actually costs $200 to $400. So what happens is that you get sponsors like myself. I'm a sponsor, and I've given scholarships to 16 people, 10 people in Philippines and 6 in Venezuela, that are playing this game, earning money, and we're splitting the profits 50-50. And now this becomes a passive income vehicle that produces like 100 to 150% return per year. So basically, I get my money back in like 9 to 12 months. So pretty crazy stuff. That's what's happening with gaming, and there's a lot more play to earn games that are coming out because of the success Axie has had. All right, that's gaming in a nutshell. The fifth use case for NFTs is redeemables. For example, new Spider-Man movie just came out. Let's say that you get an NFT for every Spider-Man movie you go to, which, by the way, this new one, it did give you an NFT for some people. Well, if you have an NFT for all the Spider-Man movies, imagine that you could redeem all those NFTs for all the movies to get a live action figure of Spider-Man that you could only get if you have all those. So that's kind of like rewarding the fans and allowing you to redeem the NFTs for something physical. All right, sixth use case is identity. So the way Web 2, which is the current web we know today, the current way it handles personal information has failed. Like your sensitive personal information has been hacked many times, and handling passwords is a mess. So, contrary to what you might think from reading the news, though, blockchains like Bitcoin and Ethereum have never been hacked and are nearly impossible to hack. So, in Web3, users are in charge and there's no centralized database to hack or sell, which makes a perfect example to prove your identity through an NFT. Obviously, there's a lot of complications here to prove out and a lot of technology that still needs to happen to make this possible. All right, the seventh use case for NFTs is credentials or certifications. You go to university, you pay a ton of money, and in exchange, you get a university degree. The reason companies require a university degree is because they have trust that that certification has value. Well, in the future, we're going to have things certified through NFTs, and the value of that certification is going to depend on the trust of the institution that is giving out that NFT. So, this will be a huge tool to disrupt certifications. By the way, on the topic of certifications and education, from Axie Infinity, which is a play to earn model, I've kind of been like pretty mind blown that you can make money from playing a game. But the only thing I don't like about this is that you have to pay, or sorry, that you're playing a game. It's not really helping you advance in any significant way other than the money that you get, which, by the way, is really valuable. People are buying laptops. My scholars are buying laptops and computers with this. But this has made me think, all right, if it's possible to make money from playing a game, it must be possible to make money from learning. So I've been pretty obsessed about figuring out how to make a learn to earn type model. If you want to hear more and are curious to learn more, reach out to me and I can tell you more about it. Might end up pivoting my startup there, but we'll see. In any case, eighth use case for NFTs is land in the metaverse. That's fucking right. People are becoming digital real estate brokers. What the hell? All right. Firstly, what is the metaverse? I've talked about it a few times and you've probably heard it as a buzzword, but what is it? The metaverse is a virtual reality in which individuals can communicate and transact with each other and with digital 3D items like NFTs. It is an online virtual world accessed with internet that continues to exist even when you're not on it. So the metaverse encompasses the entire social and economic structure that exists in both the actual and virtual worlds. Avatars, content, and goods may all travel around freely. It really is a living, breathing experience that never pauses or finishes like a game. And it relates to collaborative virtual worlds where currency can be used to buy and sell land, buildings, avatars, and even identities. So you may think that when you think of metaverse, you may think of virtual reality and augmented reality, but these virtual worlds can also be accessed with computer, phones, or even game consoles. Now, the most popular metaverses that exist right now are Sandbox and Decentraland. And what's crazy about these two metaverses is that you can buy a plot of land on them. So, Sandbox has 166,000 plots of land, and this land is an NFT on Ethereum's blockchain. So, again, NFTs are like, think of them as digital scarcity, and digital scarcity can be applied in many things. And land in the virtual world is one instance of that. And by the way, this has been blowing up on Sandbox and Decentraland. A few months ago, you could buy land for a few $100s. Now, the cheapest piece of land on both Decentraland and Sandbox is like $15,000. And I'm pretty bullish on this continuing to rise up in price. And many big companies own big plots of land, such as Binance, Gemini, CoinMarketCap, Atari, and MetaMask, all own land in these metaverses. All right, but why the hell would you want any land? Well, here are some of the things you can do with the land. On metaverses like Sandbox, you can build a game with your land. That's right. Sandbox has a game editor, which means that you can buy land, and with it, you can use the editor to build a game on your land. And if people come and play your game, they make money and you make money. Pretty freaking crazy. The funner your game is, the more money you make. All right, second use case is you can literally showcase your NFTs or build a virtual museum. So, right, you can build a world or however you want. There's an editor to build the world however you want them to look, and the editors are pretty powerful. And in there, you can create almost like a museum and put NFTs on there. And if you have an NFT drop, man, it might build a lot of hype, and you may get free advertising from people like stumbling across your land and seeing your NFTs. And so, by the way, like, why is it valuable to buy a piece of land instead of having like some metaverse that doesn't have land that you can buy and showcasing there? Well, it's the same reason land is valuable in the real world, because people can randomly discover your land by just walking around and stumbling upon it. So if you have like uh, ads or sponsorships or NFTs or whatever it is, then people will just naturally might find it, especially if you're right next to a location of a land that attracts a lot of people. So that was the third use case: place ads or sponsorships, which you can make money from. Four, people are hosting concerts and festivals in the metaverse. If you want to see an example of this, look up Deadmau concert in Decentraland. Pretty freaking cool. I was pretty impressed by how awesome it actually looked. And then finally, the fifth use case that I'll state here is that you could host workshops, events, and even private parties. With some of these metaverses, you can basically prevent people from entering your piece of land unless they have a specific NFT. So let's say, for example, I was to create an NFT for this podcast. I have 1,000 of them. And with that NFT, you're able to come into the private parties that I have in my land. No one else would be able to access them. And that creates private communities in the metaverse, which is pretty crazy. All right. And additionally, if you don't know what to do with your land, you can rent it out to someone. They can do something with it and they'll pay you for it. So, pretty insane. All right. Ninth use case and final one is fractionalized ownership. And this is like a passive income vehicle. All right, let me give you several examples. This one might be a little difficult to understand, but there is an NFT collection right now called Billionaire Coyote Cartel. And what happened is that there's 2,000 of them. And with the money that the creators made from selling the 2,000 coyotes, the NFTs, they made, I think, like around $1 million. And they put that money in a vault. And in that vault, it's kind of like an investment pool or fund that they gathered, and they're investing in different NFTs. Like, for example, Bored Ape Yacht Club, which costs like $250,000. So they're investing in a lot of different NFTs. And what they're going to do is that they'll sell all the NFTs in the vault every year and give that money back to the owners of the NFTs. So basically, depending on how many NFTs you own, you will own a fraction of the value of the vault. And you're making passive income from this, right? You're just getting money every year from what your ownership or the fractionalized ownership of your investment. This is very similar to the royalties from the music that I talked about earlier. So and the cool thing about this is that I don't have $250,000 to invest in Bored Ape Yacht Club, but I'm pretty bullish on it. So instead of owning one Bored Ape Yacht Club, I can buy this NFT and own a fraction of that Bored Ape Yacht Club, because if it goes up in price, I'm going to get a percentage of the proceeds. Cool. Another example of this is an NFT collection called Apes in Space. They're going to buy land in the metaverse and they're going to host rap concerts, and they will redistribute proceeds from those concerts and festivals out to the owners. Another one, Gambling Apes. With Gambling Apes, they're buying land in the metaverse to build a casino, which they got approval for. And the proceeds they make from well, firstly, to play in the casino, you need a gambling ape, so it's private and exclusive. And secondly, the proceeds made from the casino go back to a portion of it goes back to people that own gambling apes. Again, I could make with those 1,000 NFTs for the podcast, I could say, hey, I'm going to give 50% or 40% of all profits generated from this podcast to people that own this NFT. So if I have 1,000 NFTs and you own one of them, you would have 0.1% ownership in the 50% of profits. That means you would make what is it, 0.05% on all the profits that this podcast makes. And as this podcast grows, becomes more successful, not only does the value of the NFT go up, but you also make more money passively from the royalties. But something I'm thinking about it. Should I do it? I don't know. You tell me. You could also do fractionalized books. If you write a book, sell 50% of the royalties by giving people the opportunity to buy a percentage of the book. Pretty crazy. This can be applied to almost anything, even maybe your YouTube channel or whatever it is. All right. So that's an example of NFTs. Now, to summarize again, the use cases. You have 1, digital art / collectibles. 2 is music. 3, access-based NFTs. 4, gaming. 5, redeemable. 6, identity. 7, land. And 8, fractional ownership. Now, what final things that I want to touch on here is, how should you think about NFTs? So I think you should think of NFTs as digital scarcity, where the ownership of a digital asset that is scarce can be proven. Now, with all of the different 8 or 9 use cases that I gave you, the important thing that you should keep in mind is convergence. Think about how these different use cases can be combined together to make something more unique and useful and powerful, right? And don't just think about the convergence of all the different ways you could use an NFT, but think about how NFTs can combine with other exponential technologies such as crypto, AI, virtual reality, augmented reality, robotics, and so on. All right. So keep in mind also, guys, if you're listening to this, you're a pioneer. Be early and understand these new technologies when they come out, because this can help you generate ideas on how you can solve the problems that exist in the world with these different technologies. Technologies give you potential to solve problems that could not be solved before. And by understanding NFTs, you'll be able to solve problems that could not be solved before. Or one of my final points here is that you can create new business models with NFTs. So this is one of the things that's been blowing my mind the most. So as an entrepreneur, you will only succeed if you have a viable business model. Without money, you will die. That's what makes a business sustainable. Therefore, I think understanding the tokenomics of different cryptos, NFTs, play to earn games, and other things happening in this space is critical. Right? Tokenomics, by the way, is the economic of how these tokens and these NFTs work. And if you understand these economic models, you're going to be able to develop new ideas for business models that you could use in order to fund your venture, which is just going to allow you to be more successful if you find the right business model. Right? Sometimes the problem is not the idea. Sometimes it's not having a viable business model. And this gives you access to something much more powerful. All right. One of the final things I want to touch on here is how NFTs are valuable and how it gives financial power to creators by changing the economics for them. So when I talk about creators, what I'm really referring to is artists, musicians, content creators, YouTubers, influencers, podcasters, TikTokers, whatever it is, right? Now, there's this really great essay called A Thousand True Fans, written by Kevin Kelly in 2008. And Kevin Kelly, in this essay, which I'll link to and I recommend you read, he predicted that the internet would transform the economic of creative activities. Now, I'll quote some of the things from the article. He said, to be a successful creator, you don't need millions. You don't need millions of dollars or millions of customers, millions of clients, or millions of fans. To make a living as a craftsperson, photographer, musician, designer, author, animator, app maker, entrepreneur, or inventor, you only need thousands of true fans. And a true fan is defined as a fan that will buy anything you produce. These diehard fans will drive 200 miles to see you sing. They will buy the hard back and paperback and audible versions of your book, and they will purchase your next figurine site unseen. So this is Kevin Kelly's vision of the future for creators, but the problem is that the internet took a detour. Centralized social platforms became the dominant way for creators and fans to connect. But the platforms use this power to become the new intermediaries. And because of that, they insert ads and algorithmic recommendations between creators and users while keeping most of the revenue for themselves. Like, just consider this. As a content creator, you get 0% of revenue generated from by social platforms that are using your content to draw attention and place ads. And on YouTube, for YouTube, YouTube takes a whopping around 50% of your ad revenue. These are extremely high take rates. The good news is that the internet is trending back to Kelly's vision. For example, many top writers on Substack, which is a newsletter subscription service, earn far more than they did at their salaried jobs. The economics of low take rates plus enthusiastic fandom does wonders here. For example, on Substack, if you have 1,000 newsletter subscribers paying $10 a month, that nets you over $100,000 per year. Now, crypto, as you can see, and specifically NFTs, are changing creator economics in an incredible manner. The first way that this is happening is by allowing creators to monetize directly from their fans. I mean, social platforms, I think they'll continue to be good for building an audience, but creators can increasingly rely on other methods to make money, such as NFTs and crypto enabled economies. And as I've mentioned, if you sell an NFT, you keep almost 100% of the proceeds, and then you get 10% in royalties on the sales, which is passive income that you continue to generate. The second way NFTs change creator economics is by enabling granular price tiering. So, in an ads based model, our current model today, revenue is generated more or less uniformly, regardless of a fan's enthusiasm level. But with NFTs, you can invest almost as much as you would like in the creator based on your level of enthusiasm. For example, if you really believe in the creator and love their creations, you can buy multiple NFTs out of their collection or buy greater amount of fractionalized ownership, right? So the key thing to understand here is that ads monetize attention, but NFTs monetize enthusiasm. That is to say, the more time you spend on these social platforms, which is attention, the more money ads generate. And with NFTs, you don't need to spend your time. You just need to believe in the person and the creator, and that's the enthusiasm. So NFTs monetize that enthusiasm. The third and most important way NFTs change creator economics is by making the users the owners. Thereby, this reduces customer acquisition costs nearly to zero. Like, if you look at the expenses of a startup or company, they spend massive amounts of money with user or customer acquisition costs, which is usually going to online ads or sales staff. But crypto, by contrast, has grown to over $1 trillion in aggregate market capitalization with almost no marketing spend. Bitcoin and Ethereum don't have organizations behind them, let alone marketing budgets, yet they are used and owned and loved by tens of millions of people. So NFT projects are able to grow so efficiently with almost no advertising spend because users feel like owners. They have skin in the game. They have a financial incentive for the creators to do well, which means they will advertise the creator and their creations for free. It's true peer to peer marketing fueled by the community, the excitement, and the ownership of the NFT. Like, just look at what I'm doing right now. This place is blowing my mind so freaking much that I'm giving free advertising to crypto and NFTs by releasing a podcast on this topic. And I'm doing the same with my family and friends. I just can't stop talking about it. All right. And then so that's how I think creator economics will substantially change. It really is a new era for them to be able to monetize, which is amazing because the financial incentives incentivize them to create more. All right, so the second and last question I got from the online community was from David Glass, and he asked, once every digital item and community is tokenized, how will this change internet culture? Great question, David, because I do think eventually we're gonna get to the point where we're digitizing almost every item and everything and creating NFTs out of them. Now, what I think the tokenization of digital items means is that, firstly, people will have ownership over those digital assets where before they did not. And ownership is incredibly important because it allows you to get real monetary value from your digital assets. I think the huge shift in internet culture will be due to being able to own digital assets. And this basically is going to create a shift for creators wanting to gravitate to the platforms such as social platforms, games, or anything else. They're going to want to come to these platforms where they are going to be able to monetize more, and consumers, users, are going to be in the platforms where they can own their items. So I think the creators are the big winners here. And with the money that they make, they'll be able to create so much more because the incentives are aligned. This means higher quality art, more music, more courses, learning courses, more games, and other things that they create. So I do think this poses a huge disruption to current Web2 incumbents like the social media platforms. But I think that these big companies are going to have to adopt to Web3 models of giving user ownership over their items, data, and content. Because if they don't, I think they could be at serious peril of being disrupted. All right. Additionally, I think the ownership of digital assets changes the nature of online communities, and this shifts the internet culture dramatically. I mean, you have the ability with NFTs to create exclusive communities, and the financial cost of owning the NFTs to be a part of these communities means that there's going to be greater engagement and higher quality people that can afford to be a part of those communities and buy the NFTs. So, really, I mean, man, the internet culture is just going to shift because you're bringing finance into all these other industries like learning, health, manufacturing, whatever it is. Finance is converging with all of these other industries thanks to crypto and NFTs. All right. Last two things I want to touch on is how to buy NFTs and what to look for when investing in NFTs. So, firstly, how do you buy an NFT? Well, you need to start by going to an exchange like Binance, Coinbase, FTX, or whatnot, whatever's available in your area, and buy Ethereum or ETH, buy ETH and whatever token you need to buy the NFT. 90% of NFTs you can buy with ETH. Other ones are on other blockchains like Solana. So you'll have to buy Solana in that case, but most of them are on Ethereum blockchain. Once you get ETH on your Coinbase, for example, you'll have to send your ETH to a decentralized wallet like MetaMask. MetaMask is one of the most popular wallets. And then once you have money in your MetaMask, you can either buy NFTs by minting them from the official site when they drop. If they are sold out and you can no longer mint the NFTs, you can buy them through the secondary market. And the most popular one is OpenSea. If the NFT is on Solana, solsea.io is the popular website for that. All right, so what do you look for when investing in NFTs? So the first thing you should look for is the community. Like, what type of people does this NFT attract? Why are they interested in the topic? in the project, what type of conversations are happening is really important, and what is the level of engagement. You can also look at how many people are in the community, and what the interactions look like. Now, the important thing about a community is that you can't right click and save the community. That really is one of the most unique and powerful features. So take a moment to analyze the community of the NFT you want to buy. The second thing to look out for when buying NFTs is the roadmap. The roadmap is basically, what are they planning to build? And what is their primary mission or goal? Do you resonate with that? Do you believe in that mission? Do you think they can actually do it? And what is the potential of what they plan to build? Uh, that can determine a lot of the potential of the project. But the third and final thing, probably the most important thing, is who is the team? What is the team behind this? Because you can have an awesome roadmap and community, but if you don't have a good team, you won't be able to execute on the roadmap. So super important to see like what credibility they have, what projects they have. Some NFTs have anonymous members on the team, and sometimes that's sketchy. You should be able to like verify at least one of them to see what their track record is, and so that you don't get scammed and have someone that ends up doing nothing that they promised. By the way, guys, be careful. You can easily get scammed. Do your own research. There's also fake links, so to mint NFTs. So you'll want to go to the official community on Discord, and these Discord channels usually have a channel for official links. Only go to the official links, because you could easily lose money by minting an NFT on a fake website that looks identical to the real thing. So be careful. All right, guys, final thing here. The future of NFTs and concluding thoughts. Look, guys, NFTs are still early and they will evolve. Their utility is going to continue to increase as digital experiences are built around them, including marketplaces, social networks, places to showcase your NFTs like virtual museums or metaverses. And as games continue to get built up and become better, NFTs become more valuable, and more, right? So this is still very in the pioneering stage. And I mean, someday I think every internet community might have its own micro economy, including NFTs and fungible tokens that users can use, own, and collect. And finally, as the metaverse continues to get better and improves, which, by the way, we all know Facebook rebranded to Meta, and they're hiring thousands of employees and investing millions and billions of dollars here. As the metaverse gets more built out, the value of your NFTs also goes up. So this is a very exciting time. Do your research, learn more about this. Reach out to me if you have questions. But yeah, let me know. Do you own any NFTs? Do you have any doubts about them? Uh, Reach out to me on Instagram or Twitter at Infinite Julian with two A's, and would love to talk and be in touch. But yeah, with that, take care. And as always, be infinite, my friends.